and welcome to my Q1 2025 market update and outlook and our Q4 2024 market wrap. I'm Jarrad Brown. Thank you very much for joining us today and wishing you a very happy new year. I hope you had a wonderful Christmas, wonderful festive season, wherever and however you celebrated. I hope you managed to take a bit of a break, a bit of time out to relax, unwind, and prepare for this new year ahead. Now, in today's market wrap, we are going to have a bit of a look at what's happened throughout 2024 across the different regions, what we're expecting to play out throughout 2025, and of course, some of the key policy changes or policy potential changes that we're monitoring that could impact our clients throughout this new calendar year. We've obviously had equity markets hitting recent highs. We've had geopolitical tensions. We've had elections, particularly in the United States. Plenty to unpack and plenty going on. So let's dive into what has happened in 2024 and what we're expecting this year. So first and foremost, taking a bit of a look at the global market, we had global equity markets have a fairly positive year continuing off the back of the nosedive that we saw in 2022, particularly led by the tech sector in the United States. We've had the S&P 500, the US indices up really between about 21, 28%. We had the Australian market up between 15 and 19%, again, depending on which sectors you look at. The softness in the Chinese economic growth story saw a bit of weakness in commodity prices in Australia. So the more commodity heavy end of the All Ords did see a bit of softness there. But the broader market in China did see fairly strong growth, particularly led by the tech sector in that region. And we continue to see opportunities there today. Obviously, we've had the election in the United States, which we'll dive into. We've got an upcoming election in Australia and plenty going on politically throughout the Eurozone as well. But broadly speaking, a fairly positive year for equity markets around the world and plenty going on. So let's have a bit of a look specifically at the United States. The United States was a year of quite strong growth and fairly strong equity market performance as well. Naturally, we had the Trump victory with the US election. And really, if we look at crypto, equity market, bond market, even currency market movements, as we approached that election, it really didn't come as a surprise to too many. We did see bond yield strengthen. We saw a bit of strength in the US dollar, but really not a great deal of surprise came as a result of that election. Next on the cards and what we'll be monitoring is really what those policies actually look like as we head into the first quarter of 2025. There is obviously a bit of concern and really all eyes on the Federal Reserve in terms of when we get that next rate cut. But with Trump, it is naturally all eyes on his policies in determining exactly how inflationary they could be. Because the more money that he effectively prints and spends, the more money he pumps into the US economy could mean that inflation remains stickier and higher for longer, which could mean that the Federal Reserve can't actually cut rates as quickly as we all might like. So again, we'll be watching that space very closely, but it is likely that rates will continue their downward trajectory as we head into 2025. In terms of sectors that we like in the United States, not a great deal of change there. We remain very bullish on cybersecurity, financials, healthcare, and even the larger tech players, which whilst they've had a very strong run, while they continue to outperform earnings expectations, we do believe that there is more upside there. But investors need to be very mindful on which sectors, which companies, which players are really going to continue to outpace earnings. Because we do feel that if we do see earnings actually start to fall in line with what analysts are expecting, then it could suggest that some of those larger tech giants are perhaps overpriced. Again, all eyes remain on AI and exactly how this plays out, how this rolls out. But given the recent strong performance in the S&P 500, in the NASDAQ over the last 2 years, really on the back of that decline in 2022, we do believe it's a good year for investors to be focusing on diversification rather than simply throwing all of their money at the US equity markets. So a bit of an update on what's happening in the US, plenty more to come throughout calendar year 2025 and especially this first quarter. Let's have a look at what's happening in the Eurozone and the UK. Looking across the Eurozone, the economic picture remains a little less rosy than the United States. A bit of concern around Germany, Italy, France in terms of economic growth going forward. And naturally, the UK, we've had the latest UK budget. Now, if you are thinking of moving to the UK, have assets in the UK, are looking to leave the UK, or you're currently residing in the UK, it is a great time to seek advice. The latest budget, the changes to the non-dom status, the changes to global inheritance tax, the changes to reporting of foreign income and gains. These are all things that Australians in the UK need to be very mindful of. So certainly seek some professional personal advice on that if that does actually impact you going forward. In terms of the UK in general, we don't really see huge opportunities in UK equity markets or in the UK property market necessarily, particularly given the latest UK budget and the fact that that may drive more and more selling pressure in UK properties in general going forward. Europe, however, European equities remain incredibly undervalued relative to their US counterparts. So in that developed end of Europe, in the blue chip end of European equity markets, we do see some opportunities there. And given the supportive nature of European governments when it comes to renewable energy, we do believe that there will be some good opportunities for investors in that space as we head into 2025. Let's have a bit of a look at markets closer to home right here in Asia. Almost looking at Chinese equity markets, naturally a bit of a downward impact from the Trump victory in the United States. That is going to mean that more and more jobs get brought back to the US, more and more tariffs in all likelihood placed on Chinese imports. And given that China is struggling to really stimulate domestic economic growth with its various stimulus policies and programs, again, that does remain a bit of a concern. Given the fairly soft performance, despite a bit of an uptick in 2024 in Chinese equities, we do believe that there are some good long-term opportunities there. Not a market I would be throwing everything at, nor would I want exposure to everything, such as property, financials, construction. I'd probably look to leave those well enough alone. But looking at particularly the tech space, consumer spending, we do think there's some good opportunities there for longer term investors in China going forward as that story turns around. In Japan, we have seen inflation continue to remain stronger than it has been over the last quite a number of years, and that is obviously a bullish sign. We do remain cautiously optimistic in terms of Japanese equities, and we'll be monitoring that for opportunities for our clients going forward. Outside of that, we do see opportunities also in developing Asia as well. So looking at markets like Vietnam, like Indonesia, India, whilst it's had a very strong performance, we do see some opportunities there going forward as well. Again, not a market we'd want to be throwing everything at given the recent rally, but a market where opportunities certainly do exist. In the developed markets in Asia, so specifically looking at Singapore, Hong Kong, we see opportunities being a little more limited. Commercial property banking not showing huge signs, I guess, of upside from here. But again, we will be monitoring that space fairly closely. We have seen interest rates reach what looks to be a bit of a peak in terms of how quickly they were lifted. But again, we're not seeing that interest rates will be cut dramatically either in either market. So watch this space. Looking a little closer to home for many at the Australian market. As I mentioned earlier, we did see a fairly strong performance in Aussie equities over the last calendar year in 2024. Bit of softness in some of the commodity players, which was to be expected given China's economic growth story. The tech, healthcare, financials in Australia have performed very well, as has Australian residential property. We've seen Perth property prices absolutely shoot the lights out, followed fairly closely by Brisbane and Adelaide and even Canberra, demonstrating a very good run. Melbourne's been very poor, and Sydney has been reasonably strong, but certainly not to the tune of Perth and Brisbane over the last 12 to 18 months. But again, across the board, fairly healthy market in Australia. In terms of what we are watching, what we like, again, it is that healthcare technology space that we are very bullish on. And again, something around the commercial property, those interest rate sensitive sectors, as we do start to see unemployment rise and interest rates being cut down in Australia. Now, of course, that brings to mind, when are we going to get that rate cut in Australia? It's been front of mind for so many for so long now. And 2024 was a bit of a confusing year for a lot of investors. We saw stories of interest rates going up, going down, going sideways, not going to be cut. What do you do? What do we do with this information? A lot of confusion and a lot of conflicting stories and conflicting assessments in terms of where rates were going to head throughout 2024. But we do see rates continuing their downward trajectory from here. So when will the first meaningful rate cut come in Australia? Some are expecting that will come as soon as February, whilst others are expecting that we won't see anything in the first half of this calendar year in 2025. So watch this space, but it is very likely that rates will be cut. In terms of other policy updates that we're monitoring, naturally, the Australian tax residency framework is always front of mind. So as soon as there is more information and how that may impact our Australian expat clients and community, we will be publishing, obviously, data. We'll be letting you know exactly how that impacts you and what you need to be aware of. We do also have an Australian election on the cards in the first half of this calendar year in 2025. So what is that going to mean for super contributions, for housing affordability, for first home buyers, for accessing super to go and buy property, to negative gearing, whatever it may be? Naturally, a lot of these things come to the table. They're back on the cards. So watch this space. Naturally, we'll be updating everyone on any meaningful changes and what you need to think about as an Australian expat. So overall, pretty optimistic for the year ahead. We do expect that rates will continue their downward trajectory. We see the economic story getting a bit worse as unemployment rises, but naturally that will allow for interest rates to be cut. So again, we do expect to see more divergence. We do expect or do believe that it's certainly a good time to be focusing on diversification, whilst any good advisor would always suggest it's a good time to be diversified. Given the rally that we have seen in the US markets over the last couple of years, we do think it's probably not a bad time to ensure that you're not only invested in the United States going forward. Naturally, if you have any questions at all, do drop me a note, leave a note in the comments, reach out to me directly. Look forward to connecting with you individually and wishing you a fantastic year ahead for 2025.